Well, you devils out there, happy Friday. Here we are, September 1st. Oh, it was about 1:30 for me here in Austin. Well, I'm going to start. I think I'm going to do just Bitcoin in this video. Oh, I have some feedback here that people would prefer. The videos are a bit shorter, and if I put in 2, 3, 4 assets, I think they can be a bit long right now. Of course, you can fast forward to whatever you want to get to, but I think that'll be the format going forward. So more videos, they'll just be shorter in length. All right, so okay, there's that. Now, we're look at 2 counts today. I do read the comments that I get, and if they're constructive and not just stupid shit or pimp, I get a lot of spam. I listen, right? So I had a guy, I don't think it's 2 weeks ago, perhaps a new subscriber, but his point was you're doing a disservice to your subscribers by not giving them the bear count. Well, I'm going to assume that's a new subscriber because I've given some bear counts the last throughout the month of August. But that said, let's not miss that here. I think any bears, well, of course long term I'm as bullish as anyone. So does that color my technical analysis? Well, it'd probably be hard for it not to. But I'm mindful of that, so I do try to keep that in the back of my mind. Is my bullish long-term bias coloring the shorter-term technical analysis? It probably does at some degree. But I'm going to give you a bear count that I think bulls are going to like. Either way, this is my primary. Until this is invalidated, I remain bullish, right? So, but I want to be respectful to my subscribers, and we'll take a look at a bear count that happens to be short-term, quite bullish. Okay, moving on. All right, so I'm on Bitstamp here because so members will know this. We looked at this on the live stream on Wednesday. We have some inconsistencies in the drop down here before we went into the ETF. The court decision regarding grayscale that was quickly we pumped and dumped off of it, right? It very much of a buy the news, sell the rally kind of a scenario, which is quite common in the markets, right? That's why it's a trope, and I don't want to say just a very something that happens in the market because we all do it, right? I mean, look at the stock indexes, right? Was there anyone who thought we weren't going to come in hot today and blow through the highs with a bullish jobs report? I know many of people that I trade with. And on the shorter term stuff, we were looking for new highs. What do you know, right? Market surprises. So I think if I have time here in a second video here, we'll get to we'll look at perhaps the Nasdaq, a quick peek at the S&P, and then the 10-year, which is that's certainly influencing what's happening across the broader markets. Okay, enough babble. Let's get to Bitcoin. Now, I remain a bull that we do have good lows here, that this is a hard low right now. You can look at this daily, weekly, monthly. It's hard to argue with it right now. Again, we're going to get to the bearish count. I think this impulse here is I don't think that's one where we'd have 10 Elliotticians giving you 10 different counts. You could interpret it differently, but it's what has happened up here is the Elliott gets very spotty, right? So we have something like that, right? Do you have a good count there? Well, can you dig something out of there? It's more, same thing here, right? Do we have a clear count there? Well, not really, right? But we get tendency, right? So you can look at here and say, okay, well, I've just got consolidation. I've had a big impulsive, right? A lot of displacement here, and then I consolidate before the final push. So it's very 4-like, but the subdivision here is suspect. So I do think the more conservative approach here is to look at this as a completed impulse here rather than, and we consider this early on, right? Now, of course, Elliott counts change as the market reveals more to us. You could look at this, and I know some still do, as a 1-2, 1-2, 1. That's getting a little shaky. Again, I think better to be more conservative. If we have to tuck another 1-2 in there, that's a very high-class problem to a bull, because that just means another impulse that needs to complete. But I think this is the more conservative approach to it. And so if we look here, there's a lot of complexity here, but the premise being that we're just doing a big 3 right now. It could go deeper, right? The proposal is here. We could be heading to much deeper, but it's a very complex. It takes a lot of Elliott skill to get this every swing labeled, and we don't have certainty on it just yet, right? You won't until we get out of here. Either we're breaking this low or breaking that high. We eventually will get out of it. But that's what I see. Now, how do we get there? Given this, the pump, the dump, the news, I think we all in the crypto space feel as though eventually, maybe not this year, probably next year, we're going to see Bitcoin ETFs. It's just, there's too much money to be made. I mean, if you want to be crass about it, the business potential is too huge. So, I mean, if you're a betting person, would you bet against it? Well, perhaps that's what bears are thinking, right? It's never going to happen. SEC will never let it happen. I would propose that the business potential will overwhelm. There will be too much pressure. There will be, we don't, behind the scenes, what's going on. Do we know? No, we don't. But here's what I know. More money will be made massively more money will be made if it's approved eventually, if they are approved, because it'll be more than one. And I mean, it's human nature. We can kind of lean on, what's an Elliott count, right? It's just a bunch of human nature reflected in the chart, right? And fear and greed. Greed is likely going to lead to those ETFs coming. Now you think about it, right? How many are we going to have? 3, 4, 5, 6, 7, 8. I think there's 8, 9, 10 applications in. If only 3 of them get approved at the size that they will be buying, you want to be short Bitcoin? All right, maybe in the short term you do, right? Maybe you don't mind a liquidation wick, but again, I just longer term, right? The problem is as traders, we're so impatient. It's like, fuck, man, I want the money now. Well, okay, right? Again, it's human nature. I do too. But there's never been anything like Bitcoin. So to be so bearish, right? Or say, give me the fucking bear count. Come on, give me the bear count. I mean, maybe those are people that think, oh shit, it's going to go down, right? They're going to drive it down. We're going to take it down to below 10,000. Then the ETFs will get approved, and then, wow, my God, the buying opportunity of a lifetime. Well, okay, it's still long-term bullish. And I can't say that that's not going to happen. We might be below 10K for all. Nobody knows. Right, let's be sure. Nobody knows. Not even ChatGPT knows. Nobody knows. So you got to play what you see, what you believe, what you think seems probable, logical over time. I'll go with greed over fear. Okay, all that said, to get to this count, this is kind of a combo. This is a little bit. It's a collaborative effort to get to this count. I think I started with a members count. I think it was Wonka's count that I started with, because when I do the live streams and they give me the charts and I copy them, right, I end up with their Bitcoin chart here. And since we're on Bitstamp, I mean, this is a good starting point. Now I'm going to add a few things here, but if we look at this, again, this is unusual, but it's valid. Now we're making we're implying the swing structure to come, because we don't have it, right? So we're looking at this going, okay, could the A, B, right? If we complete the impulse here, A, B, C seems reasonable, right? It's not a force fit. I can make that work. Now it gets a little trickier here. I get another 3. Then I get another 3. Then I get another 3. So it's doable here that we could take this as our corrective wave here as an A, expand the B, and then here I get this ripping impulse. Well, that impulse has got to be dealt with, right? We can't go, oh, well, that's inconvenient to my account, my bear account, or whatever it may be. That's inconvenient to my account. I'm just going to ignore it. Well, we can't do that, right? So we have to account for it somehow. So because of what follows it, right? We don't get the traditional, even you can't even squeeze, oh, maybe it's a 4. You're kind of stuck with it. So with that, you've got to either look, okay, well, can I work something based off what followed, or do I have to work it based off of something that came before it, right? And you kind of have to work backwards here. So here's this impulse. Where am I going to account for that? Well, it's not likely a 1-2 at this point. I mean, technically, right? We haven't taken out this pivot here, but would that be your first thought? Probably not, right? So how else can we do this? Well, if this is W, and then we're going to go A, B, C into an X. Well, this, again, we're in the slop bucket here. What are you going to do with it? Well, it's not impulsive, so corrective, right? Okay, so A, B. Well, now we start to come out of here, and I know this is a guesstimate here, because I don't have a complete picture. But as it looks right now, it looks like I can get a completed impulse here. Particularly, let me zoom in there a little bit, as we come down here. Now on Bitstamp, and this is not matched by other exchanges. Definitely not on BitGet, which is where we're going to go next, or even Coinbase or Binance, right? There's a big liquidation wick on several of these here, where we just get, what's the best way to do it here? Where this is much, much deeper, right? And then then you have to look at this and go, oh, what is that, the 3? Are we truncating the 5th, right? Which is, again, truncation, the very last place to go as an Elliottician. You only go there if you have explored every other possibility and nothing else is valid. So because I can get this done here, it makes me, again, back and forth with my team, right? Which often we do before I start these videos. What else could it be, right? So if this is an A and a B, can I get an A, B, C here into a 1, right? On the idea that, well, given the retrace here, it looks less likely to be a 4. Now, could it be a 4? Well, of course it could be. But is that your first thought, right? It's so deep, you might be thinking, oh, wait a second, right? That looks much more like something I might find as a 2 here. The secondary pivot here is right into the golden zone, right? So members, we've all looked at that. All right, that was oh, God, why did it stop there? Now, I know secondary pivot, but of course we look back here, right? This was used at a 50, right? So again, you don't want to just randomly pull a pivot. You want to look, say, was it used? Did the algo use it? Which they did, right? So we can use this pivot coming back here. Now here's target down here. Well, if it's 1, 2, 3, 1, 2, 3, 4, 5, right? Which even that is okay. Do we have to do the 1, 2? Is this is the 1, 2 over here? Is it 1, 2 here? A, B, C. Oh, that works actually. I may have meant to put that in there and missed it. Let's get that down to a. Well, we'll go micro here. Okay, I think I actually did mean to do that. I missed it. So this would go up a degree. Let's do it that way. A, B. 1, 2, 3. Hang on. Okay, sorry. I have to move a stop on something I just saw. Okay, so here's where we were. Okay, W, X, A, B. All right, I'm glad I did catch that. So I just missed. I had one too few ABCs. So I got A, B. Here's the impulse, C. Right, so that's a candidate for a 1. Now, given the snapback here for this 2, granted I am using a secondary pivot, but even if you use this, right, we're right in the pocket. Let's get that out of there. Okay, so if this is the 2 here, and we're going to go 1, 2, 3, 4, 5, what are we completing, right? So that would be potentially down here. Right now we don't know how deep. Right here, we'll look at why those lines are there in a second. Okay, so A, B. 1. So after the B, I'm looking for a 5, right? So the proposal here is that we're going to get there through this ending diag. So A, B, C into the 1, A, B, C into the 2. Now look, with the implication is we would do some sort of A, B, C into the 3. Now we got to come back and we have to overlap here, right? That's the qualifier here. Oh shit, this may not be so pretty. And pull this up just a hair. Okay, so we got to do some sort of an ABC into a 3. We got to come back into the 4. right? Now, we don't want the 4 to be too big here, right? We don't want it to be beyond the 2, right? So if it's a contracting diag, we want the 4 to be shorter than the 2, right? And we want the 3 to be shorter than the 1, and we want the 5 to be shorter than the 3. So we have the potential here for this to finish as this ending diag, right? Now, I don't have any of this. So you're making a guesstimate based on the price action here. Now, it doesn't, I mean, oh boy, we have truly double bottom there. It's too soon to make another call, right? So right now, path of least resistance appears to be down, right, off of that news. Now, we're coming right back into some support here. Now, how strong is that support going to be? Well, it remains to be seen here. But right now, I think if we're forecasting, that's a reasonable forecast. Now, that's not the only forecast we have, and it could just be that we're at one of those points where, I mean, for many Elliotticians, you might look at this and go, oh, shit, man, the Elliott's not helping me here, right? So we'll look at how you might approach this just with market structure. I think you'll find that will be equally bullish, and that the opportunity here will be, you'll be more inclined to be looking for buys than shorts. Again, all due respect to my bearish subscribers. Okay, so let's look at this here. So essentially, we're trying to work a 3 out. Now, let's look, what are these lines here? So all I did was just take our volume profile tool here, and I've got, this is anchored VWAP. So let me just take this, and I'm just taking it across everything we've got. Now, so I've got all of this price action here. Of course, I want to see where the POC is, right? And then all I've done is just lines, right? Where are my low volume nodes? Because the market tends to react there. Well, they're low volume because the market did react there, right? So if you look at each one of these, they're a pivot, right? So here we did, well, we got through it. Now look where we are. And the reason I do this often, if we're looking at order blocks or fair value gaps, they're not magic boxes. There's a reason they're there. So you need to understand it. So you're not just going, well, sure, there's a box there. Well, I guess I buy it. There's always a reason behind it. So as we sit here looking at this, before I even turn it on, right, we can look right here. Here's a candidate for a demand zone, right? It creates displacement. We get the push up here. We get break of structure. So this is a pretty strong candidate for a demand zone. We'll look at the top edge of it, right, and look where we are. Does that mean it's going to hold? Well, per the count that I'm looking at here, the implication is no, it's not going to hold. For this count to realize, we're coming lower, right, into the next low volume node. So now if we start to combine some things, which is what the technician, is what we would teach you to do, right? So one TA point is good, 2, 3, 4 is better. So let's look at what else we can add here, right? Because you want as much confluence as you can possibly find if you're about to put money at risk. Now, if you're in the market, am I suggesting that you be a buyer here because you've got, we got a low volume node and you got anchored VWAP? I wouldn't buy it there. I like it a little bit lower here. I like the 24, 25. I like this range down here. When we'll get to that in a second. But I think, you could be a buyer here because the risk reward would be so small. Again, this is always, oh, fuck me. Where are these things? Oh, God damn it. Where are they? Jeez, I lose them. There we go. Okay. Oh, Jesus. Hang on. Okay. Now, if you were going to buy that, wouldn't it be reasonable to just use the lower edge of the demand zone here? Maybe you use the upper edge there. Well, there's 4.5 to 1. I'm not saying don't buy that because I don't want someone to go, oh, fuck, man, I didn't buy that thing, and then we bounced there, and psh. I wouldn't buy it there. But that's just me, right? I'm not telling you what to do. That's not what we do. What we're going to teach you is here, all of the components here that go into that pivot right there, is that giving you a sense of having an edge in the market, right? Do you feel like the TA is there? Now, if we zoom in there, you might look at that and say, oh, well, what happened there? Well, did they just run the stops there? Well, that's a reasonable thought, right? That this was a bit of a liquidity grab. They didn't get too far through it, right? And again, this is a daily. But did we get a whole lot of stop running here? Oh, if I come up a bit, get it right on there. Well, we got some. You think there were some stops under that pivot? Look what's happened since we've come and wicked it. We got there. $300-400. You think that was a stop run? I mean, you know, same here, right? Was this a stop run? That was the liquidation wick. How about here, right? Each one of those, right? That's all potential liquidity for these algos, which are just they're heat-seeking liquidity, not heat. They're liquidity-seeking missiles, right? Where's the liquidity, right? That's what it's doing. Right? Now we sort of add in some of the other algorithmic activity that we can identify, right? Again, I would say this every day. God knows how many algorithms are in there. We can just identify a couple and know what they're prone to do. Grabbing liquidity at pivots is a common thing that we see, and then you see the reaction from it. So somebody sold it there at every one of these, right? There's always a seller or stops are sitting there, which is why we just go out of our way, right? I feel like a broken record. I say this so over. Please don't sell it there. And again, it's not that we couldn't go much lower. It's just that the risk here is so high. You're rolling the dice there, right? You might as well go to Vegas, right? You get free drinks and a pretty waitress to bring them to you. This is just like, oh, come on, 7 snake eyes, whatever or go to the roulette table. All right, I'm putting it all on black. Do you have an edge? No. Let's come back here. We got a little reaction, right? Does that mean buy it? Oh shit, Well, let's finish up here. Here I start off. I say I'm going to be shorter on the videos, and here I can't do it. All right. Well, so let's look at it here. Elliott hat first on. Okay, so if this is a 1 and it's a 2, right? Well, we know. Or I'm going to go ahead and grab this. The more probable location. Not that the market is obligated in any way to do this, but if we're just going to look at odds, right, which is really what we do, right, as traders, we try and look for an edge where we think we have an edge over the house, right? Okay, if we're coming down here, it would be hard. I'd be hard pressed to see how, if this count is going to play, we could finish the diag here. Right, seems unlikely, right? So the golden zone, and we know Bitcoin loves the golden zone. So boy, down here at this 21, or shit, what did I say here? 23, 20, 21. Got a low volume node. Right. Remember that we tend to see reactions right on the edge, right? The ledge of the higher volume here. Boy, is that a sweet setup. Now, I don't know that we're getting there, but boy, if we do, I'm very interested. And for anyone watching who's like, oh, that kind of looks pretty good, right? Again, if offered down here, you don't have to sit with a limit order. Let the market react. Let's get some sort of maybe there's a break of structure here. We want to be mindful of it. Maybe there's a fair value gap here, something that would come back here so we can get out of here. Or something like that. So this becomes your risk reward, right? Now the key to that is because right? I mean, it's not. This is not rocket science, right? The key to this is the discipline to take the stop. That's of every right. I say this a lot, right? So, but just to remind you, come here, right? The market can only do so many things here, right? So either we're going to break this low or we're going to break this low. So and this is such a common. It's funny, right? People just do this to themselves, right? So your stop is sitting right here, and the market comes down here, and you're like, oh fuck, I didn't want to get stopped out, right? So maybe there's something like this. Here, let's do it this way, and we'll use a little algo here, right? And we'll just keep it simple here. So it's coming right here. And your stop is maybe just underneath here. And you're like, oh, I really don't want to get stopped up here. I'm bullish, right? I think I'm going to give that. So I'm going to move my, here, we'll just do the whole thing, right? Because people do this so commonly. Just, if this is you, just do the math on this, right? So if you do this and you say, okay, my stop was right here. because I was entering at the golden zone here, and I was given 707, right? And the market starts to, it goes through the golden zone. Yeah. Oh, well, okay, I'm gonna move this down a little bit. I'll move this down and give it a little more room. Oh shit, here it comes, here it comes. It's gonna break the 786. Oh, my stop is below the pivot. Well, I don't want my stop below the pivot because they'll just come down here, they'll run the stop here. So I gotta give it more room. Right, because I don't want to get wicked out here, because what here I've seen all that discussion about not getting caught here and the stops running here, so that's what I'm thinking is going to happen. And then you do this and like, oh I got away with it. Oh, and then, I better move it again. Oh shit, I better. And now, right, and just a series of mistakes. And we know this, right? If you haven't learned this, you're going to learn this, right? The longer you're in the markets. The market has an unbelievable capacity to punish mistakes. And even if you get away with a mistake, that's, there's things I've been saying for 5 years. If you get away with a mistake, you're going to be tempted to do it the next time. Right? So the way to avoid that is if this is where I started here, if the market is coming here and you're like, oh, so I don't want to get wicked out, you've got to take the stop there. Listen, if it comes down here and let's see if I can do it this way, and it wicks it out, and so maybe your stop was, oh shit, here, let's put it, your stop was under the 65, and it comes down here and it wicks, and then you're like, oh shit, they just ran the stops, right? Fuck, I just heard their liquidity seeking algos, they got me, god damn it, they got me, right? Oh, okay, well, okay, shit, I guess I better wait. Well, is it not likely to happen again? Well, can you do it the second time? Oh shit. Oh, it's just an ABC. Oh, well, and then the same process starts again. Right? And then we're down here and you're like, oh shit, now 786. And then it starts again. Now, the context has to make sense for you to be doing this here, right? But every time we get that pivot, this trading is as simple as that, really, at the end of the day. There is no pivot anywhere on the chart, anywhere that you are not, that's ultimately the base decision you're making. Is the pivot going to hold? That's it. That's all. That's it. All this complexity, everything else, it all comes down to, is the pivot going to hold? If it's going to hold, great. Right? So now some people say, I don't want to buy it when it's coming down. I only want to buy it when it's going up. Okay, no problem, right? So are you waiting for this to break? Are you not essentially saying the same thing here? Like, oh, well, what if they just run the stops here, and then we pop up here, oh, they ran the stops, oh, now we're down. Right, so there's got to be a compromise between those two, and you say, oh, I'm gonna wait. Oh, it looks like it's going, right? Now, do we know it's a 1, 2, 3 or an ABC? No, you don't know. You don't know until you get the 5. So it's the same process happening at the 4. Is it going to hold? Oh shit! Oh, was that an ABC? Oh, I better move my stop. Oh shit! Oh, I don't want to get wicked out. Well, right, and then the whole cycle repeats, and it all comes back to an unwillingness to take the stop. Right, that's the first mistake that leads to all of that drama in your own head. Right, and it's very negative psychological drama, right? So you start to lose your, fuck, this shit doesn't work, and I can't do this, and that you spin right down that. And it's so simple. It's so, here's the thing that's so frustrating, right? As someone who teaches traders, it's the first stop, right? You just got to take the stop before it gets too big, right? So the thing is, you set it up, and you've got that little stop there, and you're like, just okay. Right, again, members know I use the boxing analogy. I can take a jab. You get in the ring, you're going to get hit. So I can take the jab. I don't want the undercut to the jaw, which is what moving that stop does. You're just like, oh, come on, hit it. Simple, right? It's so simple, yet we make it so complicated. But as swing traders, which is essentially what we are here, right? We're going to try to define this. Yeah, I mean, same thing here, right? If it's retracing, you say, oh shit, I'm going to take that 4, right? Because I'll short Bitcoin. I'm going to take that 4 into the 5. Well, what are we basically saying, right? Is the pivot going to hold? There it is, right? There's a fair value gap there. Is it going to hold? Well, do you know? Do you know that it's going to hold, right? Well, I mean, again, I can just recreate these all day long, right? We get right here. Oh shit, golden zone. Oh fuck. Okay, now what's happening here? Right? Which one's going to win? How would you know? Well, you don't know. So the only tool we have is the context. What came before it? What are the odds? I mean, we can use indicators here. We can look for here down to a smaller time frame. We can look, hey, is there some reason that it might stop here rather than, oh, well, there's a golden zone. Well, I know there's an algo there, but there was a golden zone here, right? So, oh, fuck, okay, how do I know? How do I trade? If they're each is just good as the next, how would I know? Well, know is the wrong word. Nobody knows. You never know. Right? The algos don't know because they don't care, right? If it goes here, great. If it goes here, if it goes up to this one, they don't care, right? One of them's going to go. I can promise you that one of them's going to go. So when you're sitting here, right, you've got to look at this and say, well, wait a minute. Does that make sense in the context of what just came? Right? Does that make sense? Right? If you've done the analysis, well, then if you're doing that, don't again. It's the same thing on the short side. Oh, I think that 4 is going to go. I think we're going down to the golden zone here. When that happens here, when this starts to go against you, you're like, oh shit. Oh, well, okay, well, maybe it's a bigger 4. Oh, okay, well, maybe they're just going to sweep the highs here at the 2. And okay, well, I know that'll change the count, but I don't want to get stopped out. I don't want to get stopped out. I don't want to get stopped out. Oh, well, shit, maybe it's something bigger. Oh, maybe it's turned around. Oh, maybe we're going up to the pivot here. We're going to sweep the, right? You've probably done it. Right? And if you haven't been around the markets long enough, right? Because we don't want to take a stop. When the stop is the thing that keeps you in business. Isn't that funny? People refuse to take the stop, and the stop is the thing that keeps them in the game. And the name of the game is stay in the game. Human nature, right? We don't want to admit we were wrong, right? That's you got to get over that. There's a really good book I can recommend. It was recommended to me. Someone said, "Boy, you sound a lot like." If I can say his name, Tom Hogle. Shit, I'm not going to get his name, but it's called Best Loser Wins. Great book on the psychology of trading, dealing with losers. Right? I would encourage that to you. Oh God, so much for a short video. Okay, right. So, all right. You know, I try to make the videos not okay. Here's the TA, but to try and make it a teachable moment. I mean, certainly that's my job as the lead educator at TradeDevils. Say that. And of course, I have a team of other teachers, but we're all trying to teach you here. And the one thing, the most consistent problem, right? People do not want to take the stop. Now, again, if you're in here and you're accumulating long term, and you're like, well, shit, I don't care where I go, I'm just accumulating. Well, then okay, maybe a stop is not the key to your, but that's a different type of trading, right? That's accumulation. Okay. Then if it goes down, right? Do you average down? Do you keep buying? What's the point where you stop buying? Right, because if you're accumulating as a bull for a 3, 4, 5 year plan, and we're heading down into the 20s, into the 15s, boy, if you liked it at 25, aren't you going to love it at 10, 15? You're accumulating, right? Well, what accumulating? What you're doing is you're parking capital there. So, I'm not saying don't do that. I do that. I'm saying be sure it's capital you can park there and not need it, right? Because if you need it and you're underwater, well, now it's a different situation, right? Then that's not the deal you made with yourself when you started accumulating, right? So make a contract with yourself just like a stop, right? That's what you're doing, saying, okay, I agree to take that amount of risk and I am willing to do it because I see that potential reward. You can't change the contract mid-trade. Well, I mean, nobody's looking over your shoulder. You can. But if you do it repeatedly, not a matter of if, just a matter of when. You're either blown out or you're refunding your account because you're about to blow out, right? It's discipline. It's the discipline to accept you're wrong. The discipline to take the stop. Nobody likes it. I don't like it. I get stopped out way more than I don't. Way more. I don't like it. But I've just learned over time that if I don't do it, a whole lot of bad things start to happen. And most of it is up here. Okay. I think we're clear here, right? So this anywhere down here is interesting to me. And this is a good little practice to do. Wick off those low volume notes. I over on our you got many of you guys know we have an indicator business, right? That's for Ninja, right? And we have a dedicated indicator that we built for volume profile that highlights both low and high volume nodes, right? Just for that reason, right? You don't want to miss them. So here I'm just drawing it, right? So it can be a good idea because maybe you go, oh fuck, all right, I don't need that, right? But you know where those low volume nodes are. Interesting when you take all that out. I'm a bull. I remain a bull. If I break this low, I'm fortunate, right? My cost basis is much lower, so I don't worry about it. But I just go, well, shit. Am I still a bull? Right? Am I still a bull? Still a bull, right? So I accumulate. Okay, all right. That's. I think we've got a current count, maybe a little teachable moment. Over here. Let's go. Let's go over to the bear count. Now, because I don't want to disrespect my subs or do them a disservice, I mean, this is relatively simple count, but okay, so first, I think it's, well, the problem with this count is that you're trying to wedge a 5 into what is, maybe you can wedge it in there, right? But it's certainly at distance, it's more likely a 3, right? But let's say you found some way, I've seen counts that kind of work here. This is a triangle, and then the last is is it an impulse? Maybe you work something out in there. Maybe you wedge it in. You're like, got it. Okay, all right, fine. Okay, so we're gonna call this a completed 5 wave down. Right now, note I am out of. Pardon me. Am I in log? I think I am in log. Well, yeah, I think we need to be in log here to see this. Now, this is Bitstamp here, so I don't have full history, right? So I just pardon me. This is BitGet, right? They sponsor us, right? So I use whenever I can. So I don't have full history here, but there's the COVID low, right? So we can work through the retracement here. We have enough. Now, granted, I am in log here just to make this a little bit easier, so we can see it. Okay, so let's say you've wedged a 5 in there somehow. Would like to see it. Right, so that's my first problem with it. But all right, so you did it. Okay, so what do I got here? So can I do this? All right, well, I could probably do an ABC here. It could fly, right? I can count that out. I could probably do an ABC here. Well, if that's an ABC, right, and we didn't just go down, I'd be inclined to think, another 3, right? So another 3 would suggest, just as we're looking at it on the bull count, well, there's a 3 here. Here comes my X. Now, that could go deeper. We could go deeper here, right? Is that bearish enough for you? Well, okay, that's taking you down to 20K. Does that look like we'd be done here? 3, 3. Well, my expectation would be we'd do that. Right, now we're back. Now we got a WXY that would give us our B. Golden zone from the high seems a reasonable target. Okay, there's a WXY. Now, what's the implication there? Now, log scale, that would suggest, and I'm just going to use the algo target, 11 and change. If I take it out of log scale, 4. Let's see, maybe you get the 50, right? Maybe you get through here, right? You got massive imbalance here, but let's say you get through there. Maybe you can get the 50, right? Are we going to get to 50,000 and still be bearish? Well, if you're leaning into this count, right, you're selling up here. You're selling up here, bears, right? Right? Bears. Would you? Well, it's perfectly valid. Perfectly valid. Now, if we're at 50K, do you think maybe something has changed? Something has changed, right? Maybe an ETF or 2 or 3 or 4 got approved. Maybe just the potential that it's going to be approved, right? Because when they're fully approved, that's going. When we have BlackRock and Fidelity and Invesco and all the other, and Grayscale and all the rest of them, and there's about 10 more of them, when they're all loading up on Bitcoin for their ETF or converting, Bye-bye. Bye-bye 70K. It was nice knowing you. My opinion. My opinion. All right, so there's my bear count. What I really was trying to do over here was this. Here, let me get, oh shit. Let's remove all drawings. Okay, so let's, for those of you that are like, the Elliott is fucking mess in there. Do we need the Elliott? Nope. You never need the Elliott. You never need it, right? It's a tool. It's a technical approach to try and improve your odds. Do you need it? No. Can we do it just on swing structure, fibs, and geometry? Absolutely. Well, what's the first thing I look at here? First thing I notice, right? Vegas wave has flipped, right? It flipped way back here, April. 200, right? Vegas wave is the 144, 169, right? I put the 233 on, right? It's kind of a base layer, right? So because everybody's looking at the 200, well, there's the 233. I'm just using a fib number. So, okay. Well, wait a minute. Now price is below it, but it's going to take much lower price to get the Vegas wave below the 233 again. So we're below, right? Which is okay, right? We'd prefer to be above, right? If you're bullish. But I haven't flipped it yet. I mean, look how, boy, it's not insignificant when it flips, right? When we go underneath, right? So now coming back here, better, right? Not what we wanted, right? We wanted to see that keep going, but there it is, right? So if we look here and say, okay, well, here's the last break of structure here. This is last meaningful. And now some would call this a break of structure here, right? We go into that chop here. So there is a close, but then we immediately collapse, right? So Sonar Labs software here is giving it an internal, not an external, right? So not calling it a major, right? It's still using this low as the strong low, even though we wick through, we don't have a close below. Which, some of you are familiar with market structure and some of the lingo and all the, the repackaging and remarketing of it, right? So what do we have here? Here's a potential demand zone here. There's two of them actually here stacked on top of each other. So reasonable spot for demand. Well, you could make the case here that the first one's already been mitigated because we came to and through, right? Now we bounced out of it, but now we're right back to it. So this seems to be, really, yeah, we mitigated here. We got into it. We didn't break the 50% of it, right? So perhaps there's a little bit more, right? If we go through, which per the count I just showed you, right? The expectation is that it goes through. Well, here's the next major one here, and then we got a tiny little one down here. That would be, and then we start to put that together and say, well, wait a second. How would that fit with our friend algo? Well, I got a demand zone here. I want a daily demand zone right in front of the golden zone. We're going to get through that. Well, we might wick through, right? Great, mitigate this, right? Let's pick up any orders that are still down there. That's the idea. And then as we did before, right? We just draw this. Let's just use the whole thing. And then down here, well, we got a little air pocket down here. So again, as I did with the others, right? Just on the, why? People, right? No business was done there, right? So we have a low volume node here underneath the golden zone here. Put it in log scale. Do we need, now, is that cheating? Is it like, oh, well, that makes your, I see, it's 15 to 30, right? So you don't need to be in log. You don't need to be in log. Right? Yeah, really, you shouldn't. Right? It's only twice the range, right? No need to be in log. But pay attention down here. If we're coming down here, right? I would be hyper aware to what happens when we get to that golden zone. If we're getting to that golden zone, first let's see if we get to the 50. What happens at the 50, right? You're gonna have to do the same thing here. You're gonna have to break this demand zone to get to the 50, where you have a big fair value gap, and then you're gonna have to break the golden zone to get to the next demand zone, where underneath you have a low volume node, right? So, we doing that? Certainly possible. Do I think it's probable? I don't, but it's certainly possible. Okay, shit, how I do? Oh, 43, damn it. I literally started with, okay, I'm gonna make this 20 minutes. Yeah, something comes over me. All right, maybe it's just babble mouth. All right, I guess I probably ought to stop there. I got bull, I got bear, I got primary. Oh, I got a few teachable moments. Oh, I got a few other things here, but this would be way too long. So here, I'm gonna end this one here, and I'll see if I can come back to to do the S&P and the NQ. Oh, maybe even the bonds here. We'll do like a risk asset wrap up here. But I'll end this one. I appreciate you guys hanging with me. Members, thanks, right? Many of you have seen some of these counts and variations within the Discord, right? Keep in mind, right, anyone watching, you can always join us in the Discord. You can join us for free. You can just come in and, belt system is always an option for you. Okay, guys, have a great weekend, and I will talk to you on the next time.